Hello guys, welcome back to another Lumley trading video. In this one, it's going to be the start of a mini series that we're going to start on this channel, which is going to be Road to Funding. Now, what is funding? Funding is basically just where you get given money to trade with and you keep a percentage of that profit made. So a lot of firms can do this. Again, yes, this channel is mainly stock focused if you've been here before. We mainly trade stocks and options. Now, funding for stocks and options tends to be quite limited. And I haven't really been able to find at least any good ones unless you're going for an actual job. Obviously, this is more of a remote prop funding, and there hasn't been too many good options from the stock side. So how am I doing this? So the ones that tend to be quite good is if you're looking to trade futures or Forex. Now, I'm not a Forex trader, I don't trade Forex at all, but futures is quite similar to stock trading. I mean, if you're trading things like the SPY, obviously it trades basically one-to-one to the S&P. Now, we also trade things like TLT, the same as the T-note. Obviously, they are inversed, but they move the same. So a lot of these things, you can kind of, if you trade stocks, you can move over to the futures side. But now, why would I not just stay with stocks if that's already working and everything's going well? So there's a new strategy. I don't know if it's been too much on this channel, but I think it was about two months back now. Did a internship for a futures trading prop shop. And a lot of that was news focused. I mean, they did the technicals and all of that. Again, technicals, we trade on this channel. We go through technical analysis all the time. And I prefer trading the technicals through options because, again, I can leverage my position and have defined risk. And that's how I feel comfortable trading technicals. But trading news you can make obviously a lot more money because that's where things can move 400 ticks within just a matter of minutes. So you can make a lot of money in there. But obviously, if it can go in a direction for 400 ticks, it can also go against you for 400 ticks. And obviously, depending where your stops are, depending how big the spreads are, that can be a big downside on your account. So I don't want to personally be trading that with my own money just as of right now, or at least not with big size, because again, I'm still newer to the futures side of it. How to trade futures in the first place, and also news trading. I mean, if you go back on this channel, 90% of our trades will be through just technicals, and then we may have an underlying fundamental to kind of encourage us to enter the position. But really, we never used to trade just fully off news releases, which is how I trade this futures now. Is strictly off news. I don't trade any technicals on futures, just strictly fundamentals. And you would have seen this on the channel. We did post how to trade CPI, and I think we also did we did one more. I can't actually remember off the top of my head, but we did two of these. And again, I think we live streamed one of them and did a video for the other. And again, they played out how we thought they would. So obviously that's a great incentive. So that's one thing that we're looking to trade. But again, it can move so much. Obviously, 400 ticks on a futures contract is going to be a lot of money, especially when a lot of them are $10 a tick. Obviously, 400 ticks, we don't want to be losing that on a personal account, especially when we're newer to the futures side. So again, this is why we're going through funding. And all we have to do, or all you kind of have to do, depending on the firm, again, we're going to do this one on Earn2Trade, again, because they're more futures focused. I can use NinjaTrader, which is a platform I personally like. And yeah, futures, and it's on NinjaTrader. So they're the two main incentives to me why I'm choosing Earn2Trade. Obviously, you have other alternatives out there like FTMO, but then you're using different platforms. I think their main ones like MetaTrader, which I personally just don't like using. Now it's only costing $85 to take the challenge. And obviously, that's not much to risk. So I can go and do that challenge. If I fail it, again, you'll have parameters. We'll go through them in a second. But if I go through that and fail, I lose $85. Again, if I failed it, it means my trades went wrong. And if my trades went wrong, I would have lost more money in real money. If I then get funded, I can trade with a lot more capital than if I was trading it myself. Because again, I'm not going to go and throw in $50,000 for a futures strategy that I'm still relatively new to. Maybe a few years down the line, I feel more comfortable. But as of right now, it's just too much to kind of put on a risk. So again, that's why I like the idea of a funding house. Because again, if you can't pass the challenge, it means the strategy is not working. And obviously they do have some parameters that can make it a bit more difficult to get you funded, such as the daily drawdowns and contract sizes. So again, they can make it a bit more difficult, but again, they make you adapt. And as a trader, you need to be adaptable. So now we'll get straight into the Earn2Trade. So now onto the Earn2Trade kind of website and what we're looking at. So again, like I said, even if this was $170, again, I was going to start, I think this week anyway, but now I think the discount ends on the 30th. So if you're watching before and you wanted to maybe start, again, 50% off, it makes more sense to do it now. Again, I was probably going to start about a week down the line, but if it's half price now, I'll start it now. Even if I don't trade for a week, it doesn't make much difference. So we can see $85, what do you get for $85? So again, this isn't challenge. You don't start off with $50,000 out of the get-go. So what you have to do is you have to complete a minimum of 15-day challenge. And what do you have to do during these 15 days? Is you have to hit a profit goal of 3,000. This is if you're picking a $50,000 account. Obviously, if you go higher, then you have to make more. But again, I'm newer to this strategy. I'm not going to go in with 25 contracts because you're not going to get filled on the things I want to do. So I can see I get up to 6 contracts. That's all I would probably trade up to anyway. And I have to hit a profit goal of $3,000. So at least from now, they both seem to fit my criteria and what I want to do. Now, what are things I also need to look out for? So end of day and daily loss limit. So again, basically end of day drawdown, quite simple. That is your max loss you can take overall. So if we're on a $50,000 account, you can't lose more than $2,000 overall, so you can't go under $48,000. But you also have a daily loss limit. So this means, let's say today you lose 1,100, you will still have $900 you can lose. You just can't lose that today. You have to go and lose that tomorrow or at a later date. Because again, if you go under $1,100 down on the day, you instantly lose the challenge. So really, they're the two key things you need to be watching out for: is daily loss limit and overall. But again, these ones I'm not too fussed about, because just like if I was trading it with real money, I'm not going to want to lose more than $1,000 in a day. And well, so firstly, that's the first thing. Obviously, if I lost $1,000 in a day, I'm happy I took it through this, because if I lost that with real money, obviously I lost $1,000, not $85 as I do from this challenge. But not only that, I guess that's kind of the same thing. And then the end of day drawdown, again, the same thing, $2,000. Again, if I lose through that metric, I'm not fussed. I lost $85 instead of $2,000 as if I was trading it myself. So again, both of those are fine. Or this end of day drawdown as well does follow. So again, if you make $1,000 on your first day, then your max loss goes down to $49,000, and it stops trading once you get to $50,000. So especially when you get funded, that's good to know. If you get funded $50,000, you make $5,000, you're at $55,000, you then have $5,000 of leeway to start playing with. So again, especially when you get funded, it's good to know what your max drawdown is and where is it going to stop, because again, then you can maybe take a bit more size, you can take a bit riskier trades because you have more room to play with. But as of right now, especially when I'm going through the funding process, I'm taking the very safe trades, and again, all I'm trading is news, so I might not even get a trade every day, but when there is an opportunity, I'm only going to take the high probability trade. If for my testing there's a lot of fake outs, I'm not going to take it on this challenge, because again, it's just going to increase my chances of me failing, when for this it can be made quite simple. You just got to keep it simple. Now, one other thing to note is as well, again, even if you're not doing this yourself, just good to know that, because I'll be making every day I take a trade, I will make a video, a recap on what trade I took, why I took it, and all of that, and the size I took in the trade. Because again, here you can see you're limited up to 6 contracts. So obviously that means you could take maybe 6 S&P contracts, but can I actually take 6 contracts from the get-go? No. So don't actually know how we go to it. I think you can do it somewhere down here. Here. So progression ladder. So again, this is another key thing to note, because I can't start on day one going in with 6 contracts. On a $50,000 account, you can only trade 2 contracts until you make $1,500. And then once you make $1,500, you can then start trading with 4 contracts. And again, when you break 2,000, then you can start trading with 6 contracts. Again, not something I'm too fussed about. Again, some people hate on this rule, other people don't mind it. I'm one of the people that don't really mind it. Again, it means you're not going to blow up the account firstly on day 1 or 2. So again, it allows you to kind of ease into the challenge a bit more, especially if it's not a platform you used before, can definitely be a good thing. And again, it should probably boost your confidence along the way. If you're able to get to 1,500, yes, maybe if you had bigger size, you would have been a lot higher. But again, you can only make a certain amount a day. And what do I mean by that? Again, we'll go over that in a second. But overall, though, again, the key thing to note, you have to be watching how many contracts you can trade. If you're at 51,500 then or above, then you can start trading 4 contracts. But before then, again, 2 contracts. But again, on these kind of news releases, 2 contracts can make more than you need. And a lot of them, I probably won't even go past probably 3 or 4 contracts. So once I make over the 1,500, again, the scale up of it's not really going to matter. I'm probably never going to trade 6 contracts, at least for the near future. Not going to trade 6 contracts on a lot of these news events. But yeah, that's one of the things to go over. And then you also have, don't actually see it right here, but there is a maintain consistency rule. So here it is. Now, this one, I'm not the biggest fan of, but again, you can't control everything. You got to take some of the good with the bad. But all this one really means is you can't make more than 30% of your profits, basically 30% of your profits in a single day. So again, on a $50,000 account, your profit goal is $3,000. So what's 30% of $3,000? Again, $900. So basically all this means is if you make more than $900 in the day, it doesn't really benefit you towards the challenge. Because again, your profit goal's $3,000, you can only make a max of 30% in the day. And really, knowing how this works, again, this is only through the funding challenge. Once you're actually funded, this doesn't matter. But when you're going through funding, it can actually be a good idea just to kind of get out of your trade as soon as you hit $900. And the reason for that, or just your day, again, you might have 2 trades, but when you hit $900 on the day, it makes sense just to close it. And the reason for that is 30% of your target. So again, really there's just no point really holding through. So again, it's easy just to lock in that profit, lock in your max essentially profit for the day, and then wait for your next trading opportunity. So really, these are just the key things you have to know. Again, contract sizing, maintain consistency, and then obviously just as like your own trading, max loss, max loss on the day and max loss overall. So again, all key things to know. Again, like I said, the key things I'm paying attention to is really just, well, the only ones I need to really keep an eye on is going to be the size, but again, that's all fine. I'm probably not going to trade, or probably won't even feel comfortable trading more than two off the get-go. That's one thing. Again, maintain consistency, a bit annoying, but again, it might not matter if the moves aren't massive coming into December, which again, to kind of be expected. December is a bit more of a slow month. So if we don't see the moves anywhere near as big as normal, then again, that's all fine. We can just lock in. If we make $900 a day, close it out. If you make less, then okay, we'll still look in that profits and carry on. But again, the key thing, like anything, is always the key focus is always going to be on the daily drawdown. Again, bit annoying that we have to follow that, but in my case, I don't see it being a massive problem. Again, a bit annoying that it's there when a lot of the other firms don't do that. And again, if that's something you really don't like, you can go and find an alternative firm. But to me, it's not the biggest issue. Again, I don't want to be losing over 50% of my max loss in a day anyway. I mean, it would be quite silly to do that on one trading day, really, anyway. So I don't see that being a massive issue. But again, the main focus to me is just making sure, well, consistency is obviously there, and the risk management. I mean, they're the two biggest things of trading. Whether you're trading your own money or not, they're the two biggest important factors. I mean, if you're not staying risk managed, again, I'd rather be losing $85 than all of it. So again, that's why I quite like the idea of this challenge. That is why I'm going to start taking it. And again, like I said, every trading day, again, I probably won't trade every day because I'm trading news only. But every trading day that I do take, I will be sure to upload a video going through the trade, how we are performing throughout it, and again, whether we pass or fail it. Again, ideally we pass, but a lot of these firms, they do make money on people failing. It might even say at the bottom here how many people fail, but usually it's around like 80% of people fail it. Don't know if it's down here. Oh yes, see here, yeah, so 18% of people pass. So again, over 80% of people fail that. So again, be watching along. We may have failed the first one. Again, at the end of the day, trading, you can be risk managed, but you can never have 100% accuracy. So we may get some good setups, but they just go against us. We fail. If so, cool, we can always reset it at a future date. But again, that's the main reason I just want to do this. Again, I think I feel a lot more comfortable doing it with someone else's money than mine when I'm trading news, because again, news can be very volatile. So one thing I will quickly point out though is, so this is the news we have for the upcoming week. What am I looking to trade? So again, today's Monday. I'm not actually opening the account today because there's nothing here for me to trade. No news here that I find quite good. Now, Tuesday, I'm debating it. Again, I'm going to do some more testing on it before I open the account tonight. But either I'll be opening it Tuesday or Wednesday, because on Tuesday, we have one trading opportunity that I'm paying attention to, and that's the Canadian GDP. Now, I have been doing my testing on this, been doing actually a lot of it today, just to go back and start seeing how they perform every time this is released. And again, for right now, it seems like it's to be more of a fade, but I'm going to go back, just do as much testing as I can, is it a clean setup? Again, if it's not a clean setup, I don't want to be trading it, because again, we can only take so many losses. I'd rather get the highest probability trades. So if I open it on Tuesday, this is the only trade I'm really looking to take, and that's 8:30 US or market time. The only other trade as well, which could definitely be another trading opportunity, would be at 10 a.m. and this is the consumer confidence. Again, tends to have quite a big effect on the market. So again, this is something we'll be watching out for. Need to do a bit more testing on this today as well. But again, if either one of these or both are clean setups, then that will be the trading opportunities I'm looking at going into tomorrow. Otherwise, going further, Wednesday again has some good trading opportunities. We have non-farmed employment change, good trading opportunities. Depending, I might look into trading the CPI euro, but again, I need to test how this is moving the US indices. Or just the US futures, because again, when you're using platforms like this, again, I imagine that most of you are from the US, but if you're like me, you're currently living in England, you may be also having some focus on the European futures, whether that's the UK Gill or the Bund or anything like that. Again, a lot of the times you can't trade these on a lot of these US platforms, so again, that's why I do all my testing. I tend to test them between three products: the S&P, the T-note, so the US 10-year, and then also the dollar, because again, all three of these, I know whatever platform I trade on, I can trade these three. So again, that's why I do most of my testing on it. If they don't have much effect on those three products, I tend to just not to trade them. So again, I'll be seeing how the CPI flash affects the US futures, but again, if there's not too much movement or it's unclean, again, I won't trade it. But at least on Wednesday, the non-farms, that's a good trading opportunity I'll be looking at. And then crude oil inventories usually provides a fade. Again, literally the last 2 months, there hasn't been a trade opportunity on it. It's moved about 5 ticks off the news. But if for any reason we end up getting like a 20 tick move or more, then that provides a trade opportunity, and that's what I'll be looking at. Going down, that's it for Wednesday. Now, Thursday is going to be the key day next week. Thursday, we have a lot of things I'm paying attention to. So firstly, we have the PCE, US 830. That's going to be a big trade opportunity. Then we've got the ISM PMI, 10 a.m., another big trade opportunity. And then the final one on the day that I'm really paying attention to is going to be the natural gas storage. Again, we trade this on the channel most weeks. All it is a fade opportunity. As soon as you see natural gas move in one direction quite heavy off the news, tends to just fade it and it moves straight back to the open. So they're the three main ones. Again, Thursday, I think Thursday will be an easy day to make that $900. Wednesday, again, we'll be looking, just really depends on how the non-farms perform. But again, that's definitely possible to make, again, the 900. And again, Tuesday, even if we trade it, I don't think it's going to be a massive day, maybe a few $100s. But again, we'll look into it, see, again, all it is testing. How does it perform? Does it make big enough moves to even warrant our time trading it? Again, we'll look into it, but it's not the end of the world. And then going into Friday, we have non-farmed employment change. Again, another big trading opportunity. This is going to be the key one. And again, this is probably the only thing we'll trade on Friday. Fridays aren't the best days to be trading. Liquidity is usually a lot lower. There's usually just a lot of fake out. So we'll look to trade the non-farms. And I actually have a new strategy on how I'm looking to trade these. So it's for your percentage range instead of a value range. So again, we'll probably go through that in the Friday's video. And yeah, so I mean, this is the key thing we're looking to do. Again, trading it all through Earn2Trade. And all I'm looking to trade off it is news. And again, not every week there's not going to be lots of news like this week. I mean, there's about 4 or 5 events. That's quite a busy week. So again, should be able to make some hopefully good money this week. Coming into next week, we then have ISM PMI services, but again, either or, manufacturing or services tend to move the market. So trading opportunities. So again, that's the thing. That week doesn't seem like there's actually a massive amount of stuff coming into the Friday. There's actually a bit, but again, that week we'll probably only have 2 trading days. So it doesn't mean we're going to be trading every day. So there won't be a video on it every day. We might only be taking 1 or 2 trading days a week. It just depends what's coming out. Anyway, I hope you like the idea of this. Let me know if you've ever done a funding program, or if you are funded, or anything along those lines, or if you're planning on getting funded. But if you did enjoy this video and you're looking forward to seeing how we progress in this challenge, Let me know in the comments. If you did enjoy the video, don't forget to drop a like and subscribe. Hope to see you next one, and that's it. Peace.